Hi, Jenny Stone here from HR Shield with your HR Rescue. Each day, we get hundreds of questions from our clients and other small and mid-sized business owners about some of the most common HR issues. We figured if they have those questions, you might too. So let's provide a lifeline and share our answers to some of the most common scenarios. Paying federal and state unemployment taxes is not optional. Small businesses, especially, might not be aware of their responsibilities when it comes to filing or responding to claims. It's important to know all of the rules because not paying them or paying them incorrectly could result in penalties. When an employee is let go due to a situation beyond their control, for example, a worker who was laid off, they can apply to receive a percentage of the wages they would have earned if they were still employed to help them until they can find another job. The money an unemployed person gets comes from unemployment insurance, which is funded by the payroll taxes your company pays to the government. Unemployment insurance is managed by both federal and state governments. Each state has its own unemployment insurance program, which the federal government oversees. As each state has its own rules for administering unemployment benefits, it's important to know what they are if your company has locations in multiple states. Unemployment taxes are made up of the Federal Unemployment Tax Act, FUTA, tax, and states use State Unemployment Tax Act, SUTA tax, a predominantly employer-paid tax. FUTA is an employer-only tax that is 6% on the first $7,000 each employee earns per calendar year, which means the maximum amount you'll have to pay per employee is $420 per year. Typically, you'll receive up to a 5.4% credit for paying state unemployment taxes. If your company qualifies for the maximum credit, your FUTA tax rate would be decreased to 0.6%, reducing your total FUTA liability to $42 per employee per year. By January 31st each year, you'll file Form 940, which shows how much FUTA tax you've paid for the year. SUTA. Different states use various terms when referring to SUTA, including reemployment tax and state unemployment insurance, SUI. Each state determines its own wage base, which is the highest amount of wages per employee that SUTA applies to. As an example, if a state's wage base is $12,000, you can only withhold SUTA from the first $12,000 you pay your employees. Each state is also responsible for determining its own SUTA tax rates, which vary for each employer. SUTA tax rates are determined by how many unemployment claims you've had in the past. So what happens when an employee files an unemployment claim? So, an employee leaves the company, and a few weeks later, you receive a notice from the state saying the employee has filed an unemployment claim. Now what? First, determine if the former employee's claim is valid. If you fired them for cause, or they voluntarily left the company, you can contest the claim. If they were terminated because of a situation out of their control, such as a layoff, you can accept the claim. If you accept the claim, you can either indicate that or simply do nothing, and the claim will be considered accepted. If you contest the claim, you'll have to respond to the state unemployment department before the deadline on the claim, usually 10 days. If you don't respond by the deadline, you could get hit with a higher tax rate and penalties. Include details such as the employee's compensation, occupation, and employment dates, in addition to detailing exactly why the employee was terminated. Having comprehensive records in their employment file is critical to successfully winning a claim. If you contest the claim and the state determines that you are in the right, the former employee can still appeal the decision. In this case, the state unemployment office will conduct a telephone hearing between your company and the terminated employee. Your attorney should represent you on the call, so it's important to discuss the hearing prior to it. Just like a legal hearing, you're permitted to have witnesses and evidence on the call, so be sure to get all people and documentation lined up beforehand. The burden of proof to convince the state that the former employee was terminated for cause is on your shoulders, so make sure you've got everything you need. As always, thank you for watching and listening, and don't forget to hit the subscribe button. And you can always email us for more information at support@hr-shield.com or enable our Alexa skill and ask your questions there. Just say, "Alexa, enable HR Shield."